Hey guys, I just put together a series of slides to go through a discussion of why gas is the most undervalued crypto asset in the world. And I would like to have I would like to show you analysis that would discuss what should be the fair value of the price of gas compared to NEO. And the interesting thing about this analysis is it doesn't look at the fiat price. It only look at the math behind the ecosystem and the other assumptions that we're going to go through. And okay, let's start. So as a disclaimer, this presentation is just for informational purposes, and it should not be treated as financial advice. So just give you a little bit my background. I graduated from Stanford University, and I had background working in a venture capital firm and currently work in a private equity firm. So this is as for disclosure. But in general, anything that like I'm going through today, it should not be treated as an advice. Rather, you should do your research and you should make the best decision that you think is good for you. Um, so we're going to go through a series of assumptions for the purpose of this analysis. The first assumption is that there are 100 million total number of NEO, and there will be 100 million gas that will be mined in the ecosystem. The second assumption is that there are each year there will be 2 million blocks generated on Neo platform. So there's a blockchain that every few seconds a new block would be born. So approximately there are 2 million blocks that are generated each year. And then the assumption here is that the gas that is mined per each block is it start with 8 gas per block, and then it would decrease 1 unit until it get to 1 gas per block, and it would remain constant. For example, the second year, the rate of gas mining generation would be 7 gas per block. The third year would be 6 gas per block, and it would continue until it get to 1 gas per block, and then it would just remain constant until year 22. So in total, we're gonna have like 100 million gas mined, and that will be our constant supply and nothing more. So here's the important assumption that the value of NEO is based on the fact that this is an asset, this is an income producing asset, and the value of NEO should be the present value of all future cash flows at specific discount rates back to the present. So this is a very important concept because the whole purpose, the whole value of NEO is the fact that this is something. This is an asset that produce gas, produce dividends, and the dividends are the currency. So NEO is a share in a platform. So the value of NEO, the valuation of NEO should start with gas as an income, as a producing asset, as an income producing asset, as this income producing asset. Um, the next assumption is that there are 50 million NEOs that are locked by NEO Council, and this will be added to circulating supply over time, and based on assumption that no more than 15 million NEO per year. So, based on the assumption that NEO valuation should start with um, the present value of gas, um, so we get to this assumption that the NEO asset will receive gas dividends through two parts. Part A is the mine gas that you are receiving as a NEO holder until 22 years, and after that it stops. And then the second part is the gas that is spent on new platform as system fees, and there's no time limit on that. It could start from year one, it could go all the way to the future to perpetuity. And this is actually an interesting concept because not a lot of people understand that the only thing that the gas that you receive in your Neo account or Neo wallet is only just the mine portion. It may be true now, but it will change in the future once there are a lot of there are dApps running on the Neo platform. They have to just pay with the gas, and that gas would be recycled back to the Neo holders. I'd like to go through the present value concept pretty quick here for those folks that don't have finance background. So in finance, when we want to get to like valuation of one asset, we look what would be the present value of the cash flow that the asset is generating over the time. So let's assume stock A is an asset that give us like $10 dividend each year to the future in perpetuity. So the valuation of stock A is the net present value of all those future cash flows discounted back at a specific discount rate. So we're gonna go through like the what should be the discount rate for our analysis, but let's say here is 10%. So you look at here, year one, $10, year two, $10, year three, 10, 10, 10. So these are the nominal dollar, like that. You exactly receive $10 on year two. You exactly receive $10 on year three. So the NPV of all these would be 10. When we want to discount the $10 on year one to present, we divide 10 by 1 plus discount rate to the power of the year. So sorry, here should be 2, 3, 4 is like a typo here. So yeah, 10 divided by 1 plus 10% to the power of 2, 10 divided by 1 plus 10% to the power of 3, and etc. And then this is basically a formula that calculates the perpetuity. So here, that means like in year two, that $10 worth $8.26, not $10, it's 8.26. And the sum of these value is $100. So you can trade this in market for $100 because then this asset, this stock will produce these cash flows in the future. So that's why you can trade it for $100, or that's why the value of that stock is $100. So let's just continue the assumptions. So what should be the appropriate discount rate for neo valuation? And when we look at it here, I like I think the best valuation or the best discount rate to use for this valuation is 30%, which is pretty actually um, conservative also. And it involves 4% risk-free rate. Like that means like if you put your money in like whatever like asset or bond that is assumed to be risk-free, you will get at least 4%. So there's 6% market risk premium, 15% project risk premium, and 5% systematic risk premium. I don't want to go through each one of those individual, but I think 30% is a reasonable amount for the discount. Like that's like the least amount of expectation of return on your investment that you could have, especially for like a startup company in crypto, which is a risky asset. So you want at least 30%. So um, another important assumption is that you want to assume 10% of the circulating supply of gas in the market is bought by the companies, by the third parties, and then is spent on the neo system. And the comparable that we can get to that number is if you look at the Ethereum in the last few years, the last couple of years. So based on Forbes, there are nearly $2.3 billion that was raised through ICOs. And if you look at the current market of Ethereum, it's around 28 billion. So that represents like 8% of the total Ethereum in the market. So that means like in other words, 8% of the total Ethereum ethers in the market was bought by the market and specifically spent on the ICOs. So that's why we're going to assume that each year, the circulating supply of gas will increase, but each year, let's assume that um, 10% of the circulating supply is being bought by these companies and being spent on system fee or transaction fee or whatever. So the valuation of NEO starts with the present value of um, mined gas, the gas that it's mined until 22 years, plus the present value of the gas that is spent on the system fee. So for the first part, we're looking here at let's say like the first row here. I just like look, it would show the blocks that is generated. So two, two, two. If you remember, there are 2 million blocks each year, and then here is the gas per block that it's being mined. So the first year 8, 7, 6, 5, 4, 3, 2, 1, and it will remain constant until year 22. So here in this line, you'll see that if you multiply that by that, you would have the total amount of gas that is mined up to that year. And in total, it should be 100 million gas. So so um, here this line, you have the discount rate of that specific year based on a discount rate of 30%. So this means like 1 divided by 1 plus 30%. 1 divided by 1 plus 30% to the power of 2. And then once you multiply that, it would get to 35 million gas. So that means like the MPV of gas mine for 100 million of NEO is 35 million gas. In other words, you could say one NEO, you could trade if the present value of gas mine for one NEO is 0.35 gas. So in other words, if the income for the NEO, the gas income for NEO was only through this mine system and nothing else, then in a rational market, like a rational investor would sell one NEO or trade one NEO with 0.35 gas, because that is the gas that the investor would receive if he holds NEO, and in the future, and when they discount it back to the present, is equal to 0.35 gas. So one investor would exchange one NEO with 0.35 gas. But we know that this is not the case because we're going to have this portion, which is the gas that is spent on the system fee. So let's go through that. So here we're looking at we want to calculate so how much would be the gas spent on the system fee. So the first row here is just like showing the amount of like these represents the year, by the way. So the first row here is year, and then here we're looking at the NEOs that are locked by NEO Council. So 50 million here, and then 15 million is unlocked. So there would be $35 million. Sorry, 35 million NEO that is locked, 25, and nothing is left here. So the cumulative gas mined, which is actually come from the previous slide, is 16, 30, 42, 52, 60, 66, and all the way that it will get to 100 on year 22, and it would remain constant. So you can't have more than 100 million gas at all, because that's the total cap of the number of gas that could be mined and exist in the NEO ecosystem. So we are going to reduce the gas that is locked by NEO cancel, because those NEO accounts or NEO wallets that have that like 50 million or whatever number of NEOs, it will still receive the gas because it's part of the all the NEO accounts. So it's still like receive the gas. So here is like in this year, is like in the first year, because there's 50 million uh, neo, which represents 50% of the whole neos. So that means 50% of the current mined gas should be locked as well. So that means 8. So 50% multiply 16. In here, like 35% of these mined gas that exist should be locked. So it would be 10.5 million gas that is locked by Neo Cancel. And then here, after year 5, there isn't anything. So like Neo Cancel can use those gas as part of like the incentive to developers, or whatever they want to use it on, and it would be added to the circulating supply, the circulating gas that is uh, ready and available to be traded by the market. So here is like 8 million gas for the first year. The second year is 19.5 million. The third year is 33 million. Fourth year is around 50 million. And the fifth year is 60 million gas that would be available and circulating in the market. So out of these circulating gas, if you recall, we had an assumption that 10% of that is going to be bought by the companies and it's going to be spent on Neo system. So that means when they buy it, so that means like these are the amount of gas that each year would go to all the Neo holders. For example, on year 5, there's 6 million gas that would be bought by these third-party companies, and it would be returned to the Neo holders, and the Neo holders would receive that amount of gas on top of the mined gas in their account. So when we add the discount rate here and we discount them, what would be the present value of all these gas dividends from this system fee, it would equal to uh, 0.13 gas. So this is the present value of gas spent on system fee. So as you recall, so the value of Neo is the sum of those two numbers. So we had 35, 13. So the value of one Neo should be 0.48 gas. So in other words, a rational investor now should be able to exchange one Neo with 0.48 gas. And that means one gas is equal to around two Neos. And the interesting, when I got to this conclusion, I was like kind of shocked that how uh, how undervalued gas is. So as of today, one gas is zero point 0.6 neo versus the rational mathematical valuation of one gas should be twice as neo. So which is insane. And just give you some like to put this number, this irrational number into perspective. If this ratio uh, wanted to be like true, then that means that every single year 100% of the gas supply of that year should be bought and spent on new platform. So this is like crazy. So for example, in Ethereum, that is, let's say, is $30 billion market cap. That means all that $30 billion worth of ether should be bought and spent on new companies. So there would be $30 billion worth of like new company, which is like insane. It is like unrealistic. Like that is like insane. And then if another interesting thing is like if you assume like 5,000 gas fee for new asset registration, which is like this is like number that is published in the Neo website. That's a fee that if you want to put a new asset, then that would be 5,000. Then with the current Neo yes ratio, that means like next year, just next year, there should be like 1,600 new companies that they should be added on Neo platform. Like like this is insane. Like like as of today, there are 30 companies that are competing in a competition, and Neo Cancel is going to reward 10 of them. So that's like Like just to put it in perspective, like how many new company, how many new registration you want to add. I mean, this is like crazy. So that is exactly why you should not sell your gas. So beside the fact that gas is extremely undervalued, one might argue that they can sell gas as soon as possible and buy more NEO to generate more gas and take advantage of the compound interest. But the interesting thing is, like, I was curious about it, and then I did a model. I did quick analysis and put together three scenarios. What if like we had like 1,000 NEO on day one, and after 180 days, we would do these three different scenarios. So scenario A is if you sell your gas as soon as it reached to any amounts every day and convert it to NEO, put your NEO back into your NEO wallet and generate more gas. At the end of this 6 months period, you're gonna have 60 NEO more. So that means just 60 NEO more than the what you had. Okay. So in scenario B, if you accumulate all your gas and do not sell it at all, just keep the gas for 6 months, and then at the end of 6 months, whenever the the correct ratio of neo gas is applied, or the neo gas ratio is corrected, or break out, then you convert those gas to neo. Then you're gonna have 1,180 neo. And scenario C is if you just accumulate all your gas with the current neo gas ratio and never change it, never sell your gas, and at the end of these 6 months, still market is stick with the unrational neo, the current neo gas ratio, which is like zero point 0.6, which is extremely irrational. So you would have 1058 neo. So the very interesting thing is the difference between scenario A and C is only 2 neo, just 2 neo. And the difference between that one and that one is 120. So that means, like, if you do not sell your gas for 6 months, just stick with it. Do not sell your gas. You could get a reward of 120, versus if you just convert it, if you just, like, as soon as, like, you just if you if even if you sell, sorry, let me just put it again. If you if you do not sell your gas for 6 months, if what I'm saying is true, and the market realizes that this gas neo to gas ratio is insane, and it's correct, then you'll have 120 reward. Versus if it doesn't, you lose opportunity of the compound interest. Then you only miss two neo, because you were getting 1,058 here, and here you get 1,060 if you use the compound interest. So your risk to reward ratio is 60. So that means you are insane if you sell your gas now. You're insane if you sell your gas now. So I'd like to also look at some interesting, like, historical ratio of neon to gas. And if you look at this chart, um, so I pulled this together from CoinMarketCap, and it's up to October 22nd. It's not up to date. Today is November 1st. So if you look at this chart, this is a very interesting, I think. It's a very interesting chart that you probably haven't seen before. Like, here, you see it started like in back in July. So like here, one gas was equal to 0.2 neo. So that was like a resistance. That was a support line here, and then it would get to this resistance of one, and it come back, and it would go up, and it would come back, and then it would just get to a support line of zero point 0.4. So one gas equal to zero point 0.4. I would come back up again, and it would get to one, and then come down, and now it's probably around like 60 here. And probably like it was October 22nd, so it was 65, and now it's back here 60. So we're like around here. So this is a trend that you see, that the gas price versus NEO price is going up and up and up. And it would get to the psychological, this resistance of one and come back, come up and come back. And this is a psychological resistance point. And once it consolidated here and it would break out, then it would just convert a lot of inexperienced new investors to switch from NEO to gas, because they think, oh my God, like now gas is more valuable than NEO. But they don't understand that the price per token doesn't matter. Actually, the what would matter is the total market cap. Like for example, company A could worth, the price could worth like $1,000, but company like and only 10 shares, and company B might worth only $1 and billion shares, hundreds of billion shares. So which one worth more? Of course, company B. So here's the thing, but just when you look at the price per token of gas versus NEO, a lot of people like are emotional, and they might not look at the total market cap. And as soon as this break out, then they will say, "Oh my God, gas is worth more than NEO, so let's just convert to the gas instead of NEO." So this is a chart that I think that this is going to consolidate here, and as soon as the like something happens, then you'll see a big breakout from here until you get to the reasonable amount of neo gas ratio. Another interesting chart I put together is the daily volume of neo versus gas. So this is the daily volume of neo. This little line is gas, and that means like the daily volume of gas is only 3% of daily volume of neo, which is insane. Like just a difference, and this is due to the fact that there's no there's no demand at all in gas, because there's no company to that need on that, and there's only just a couple, just a couple exchanges that the gas can be traded on, and nothing more. But neo are like a lot of exchanges that accept neo, and it's being traded in different countries and stuff. So imagine if more exchanges add gas, and also more dApps start to, you know, run on the new platform, which they would require massive amount of gas. So then what would happen? So just to sum it up, um, the gas is the most undervalued crypto asset in the world. It's currently traded at $20. It is insane. So the institutional investors are currently accumulating gas as they know it is grossly undervalued. The Palm Beach Confidential report, which is a very valuable report, predicted the price of gas to reach to $300 and advised to buy gas up to $30. So you should never sell your gas. You should never sell your gas. And in fact, just accumulating your gas is not only like it's like the best strategy to have. And after the, the price of neo to gas, the ratio of neo gas stabilized to what it should be, then it is a good approach. It is a good strategy to convert all of your accumulated gas to neo and just stick with neo, and then that would, because that would be the wealth. Neo is the wealth, is an asset that create wealth. It creates income. That's why neo is valuable. But now gas is extremely undervalued. So I hope that you enjoyed this presentation. Just let me know if you had any question, any thought. Thanks.